Well, let's look more into those developments. Sara Hsu, Assistant Professor of Economics at the State University of New York at New Paltz, joins us live from Tennessee. Welcome, Sara.
Thank you.
Now, the Trump administration recently raised tariffs from 10 to 25% on $200 billion worth of goods to pressure China in negotiations. Now, China's made it clear that it's not going to be blackmailed or bullied. So where can negotiations go from here?
Well, it appears that negotiations are not going to happen in the short run. It looks like none are slated to happen. And in fact, this is the opposite of what the U.S. should be doing in terms of negotiating with China, which looks at this as a way to make it lose face and a way that does not show any sort of confidence in Chinese leaders.
Now, China exports more goods to the U.S. than the U.S. exports to China. So what other tools does China have as leverage in this trade standoff?
Well, China could block U.S. investment in Chinese companies or block international mergers and acquisitions, as it had done with Qualcomm recently. And it could also reduce its investment in the United States.
Now, a lot of people are wondering who's really going to suffer the most in this. We've already seen Harley-Davidson moving some of its manufacturing to Europe to avoid the tariffs. And we know that Tesla was already expanding with a plant and research center in China. Could we continue to see more U.S. companies moving operations to serve these target markets, especially with all this uncertainty?
Yes, it seems likely. And I think that both consumers and producers will suffer as a result of these additional tariffs, which will cover half of the goods that the U.S. imports from China. And if and when China retaliates, producers will suffer as they have to pay more to export to China. And we're already seeing a lot of pain on the part of manufacturers in the United States due to the tariffs that were placed. Focusing on China's Made in China 2025 industries, such as high-tech intermediate goods. We also see U.S. farmers suffering as a result of the tariffs. Donald Trump has promised that he would provide some sort of aid to the farmers who are suffering, but it's not clear when that's going to happen and whether that's going to be sufficient.
And speaking of that aid, he is trying to do this in order to really offset the losses that the farmers are having. But doesn't this set a dangerous precedent? Because what about all the other industries also affected by the tariffs?
Right. It's something that doesn't really make sense. Instead of increasing costs for the producers and then getting the taxpayers to bail out these industries, it just makes a lot more sense to have free and open trade and to negotiate with the Chinese as the Chinese like to be negotiated with.
Now, Trump is trying to really tell a lot of his supporters that even though they'll see short-term pain, it'll be long-term gain. But a lot of economists just don't agree. What's your take on this?
Yeah, the trouble is that President Trump doesn't understand what a trade deficit is, and that it's not something, especially in the case of the U.S. and China, it's not something that punishes the U.S. American consumers consume more of Chinese goods than Chinese consume of American goods because we make about 5 times more money. And it's also going to impact producers. It has been impacting multinational firms that are American, that are based in China. It's just punishing them for moving overseas to China.
Now, when you have the world's 2 biggest economies going at it in a trade war, how else are we going to see this impact on a global scale?
So it's going to have a major impact in terms of slowing down global growth. A lot of economists are worried that it's going to impact supply chains because China is a major processing hub for lots of intermediate and finished goods. It's just going to disrupt all of that. And in the long run, it's going to force companies to move to other countries and set up the supply chains to be different to counteract the tariffs.
So which other countries do you think might benefit as China continues to lower tariffs and open up its mother and really continue with this globalization push?
Well, some countries are benefiting to some extent, although the ones that are benefiting are also suffering to some extent. So it's hard to understand which is going to take precedence. Are they going to benefit or lose overall? Some of the countries are like Vietnam or Thailand, to which multinationals are moving or actually accelerating their move from China to other countries that are lower cost. And those countries are also part of global supply networks. So they're going to suffer a negative impact because they're not shipping goods to China anymore for part of that supply chain. So it's not exactly clear who's going to completely benefit or completely lose.
All right, thank you so much, Sara Hsu there of State University of New York at New Paltz.